The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. It's Thursday, so we've got our guest Tim Ord on. Make sure and get ready for your questions. If you have a stock you want to look at, email me, and we'll talk about it with Tim. It always takes him a couple of minutes. He's not always sitting there banging away at the keyboard. So let us know in advance or call in, and I'll make sure that he knows about them and can look them up during the breaks. Before you call, 877-927-6648. We're up 52 points on the S&P cash. Volume, I'm going to say underwhelming at 6.4 billion shares. Certainly is not right now something that would make me want to stay up and say, there's something more here. More about maybe there's something less here, but we'll see. As far as stuff going on, bonds, we've been talking about the TLT over the last couple of days. Even worse today. What do we have? Printing these off. So let's go ahead and get this up for the TLT. We don't need it as a Gartley. We don't need it that. Let's go ahead. Anyway, another gap down. 142.81. Going to like 139, I suspect. And that's what really makes me dubious about the pop we had. Now, that being said, are we expecting the end of the world? And no, I am not. But I'm going to say that I already had somebody ask me about Apple. So let's pop that up if I could find the link here. And where it's going to expire. I ran these at about 1 o'clock. So what, about an hour ago, hour and 10 minutes ago. Apple option market maker is pretty sure that it's going to expire between 140 and 145. So there's not a lot of movement in that. You know what? I went through, 90 of them in the last hour. They all show that we're at the very extreme range of what option market makers think the highs could be. So I don't know that we go down to nothing, but I think this could be problematic. Low volume. We've got China opening up tonight. We've got jobs reports tomorrow. And as I said, I do not like a few things going on. I don't like the transportation issues with all those containers hanging around doing nothing. I went out again last night. I went to Target, not Walmart, not Sam's Club. A lot, at least around here, still empty shelves. Not making me think all kinds of warm and fuzzy thoughts. And then come in here to a TLT at 142.80 right now. 142.73 was the low. Is making me think we may not fall down, but I don't think we're going to stumble up. I think, like I said, about 90% of the options I look at every month show that we're at the very extreme high. So maybe we hang out here, but option market makers are not betting on any higher than we're seeing today. So maybe we go down to 4,400 tomorrow. Maybe there's something else. Maybe we gap down and play around and then come back up here later next week. But I don't see a lot of reasons to be jumping up and down and going long. If I am long, I'll be out today on any position that I have. In fact, I am making a very small but huge bet if it pays off tomorrow on lower prices and higher volatility. So we shall see what happens. As I said, in the next segment, we've got Tim Ward. We'll look through his charts, see what he has to see. As far as that goes, make sure and get your calls in early and let us know what you want to look at. We'll try to get to Tim in between some of those charts that he's already sent me that we'll get to. And that's kind of it. There's I'm not going to do a little history. I'm going to probably look at a few other stocks out here in FLX. Kind of a little dark cloud cover. And if you haven't watched Dave Chappelle's comedy special, pretty funny stuff. I get it why you can still watch it. I didn't know he was going to be a free speech hero. But funny nonetheless. But make sure and get it before they cancel somebody else. So looking at that again, so far everybody's been discounting the strike that's been authorized. It hasn't come to pass. But that and Disney up. Disney actually looks like the weaker of the two right now. This gap up on very, very light volume today. I don't think that they have the depth to do what they want to do. Plus, a lot of the properties they spend a lot of money for, they're just running them. Star Wars, a lot of the other ones. They got somebody to make something finally worth watching in Star Wars, The Mandalorian, and they can't just keep their grubby hands off of it to run it for us all. That's why we can't have nice things, but that's it. 877-927-6648. Email me at path@tfnn.com. And what else did I want to look at here real quickly? Question about to GDX. And a little pop. And another thing, I wanted to get back to it. Somebody emailed me about what options are going to say and do tomorrow. On the weeklies, I don't even start looking until about noon tomorrow to see what like Apple is going to expire at, because there's generally sometimes 5 or even 10 times as many options out for the next week for the monthlies. And it just that always overwhelms anything about expiration tomorrow. So generally, by the time you get about noon in, you start seeing what they're going to do with those options that expire at the end of the day. But they're not real big at getting in front of that, just to see a lot of people cash in on the ones next week, because there are so many more options for the monthlies than there is for the weeklies. But that's it. Anyway, GDX, you had a little push up here today, but man, again, kind of like everything we've been looking at here, not giving me warm and fuzzies, up on about half the volume we had so far yesterday. When we return, it'll be Tim Ward of the Ward Oracle, and we'll be looking forward to your phone calls for him and my questions for him on his charts, which he's already sent. Back in a
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month, and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back like a bad rash with that doesn't have anything to do with him. I meant me. We're here with Tim Ord of the ord-oracle.com. Tim Ord is a noted author on price and volume. Also had a newsletter for over 30 years. Won many awards for Timer of the Year. And we're glad to have you back after a 2 or 3 weeks gone. How you doing today?
Good. So, a rash, huh? I'm up there with a rash. Thanks.
No. I said I'm back like a bad rash from the commercial.
I know. That's okay. So, but anyhow, I sent over 3 charts, and this is kind of like looking at the bigger picture on the first 2 charts. Then we'll kind of nail it down into a short-term chart. We're looking, basically this kind of sentiment, it is sentiment indicator on the market, equity market, the SPX. But back on this chart, I think was updated today. And what it is the American Association of Individual Investors Bull-Bear Ratio. So that chart in the middle is a ratio. And when it gets down below 0.75, usually the vertical lines in that light blue area indicate times when it was below 0.75. As of today is 0.69. And the first time it got below 0.75 was back on September 20th. And the market's kind of been up and down. That was the first low. We went back down and tested that low this week, and we bounced off that low. And since September 20th, though, that ratio has been down below 0.75. So it's looking, anyhow, it's an intermediate term bullish sign because everybody's basically bearish here because of the, bulls right now are 25.5 and the bears are 30. In other words, of all the American Association of Individual Investors, out of 100%, 25 of 100%, a quarter of them are bullish, and the other 75 are or at least neutral. And funny how you get my idea. They're basically they're thinking this is a worthwhile top, and the market's going to move lower. If you notice, back in the last year in March, it got below 0.75, and the market rallied, over 7 months there, and that ratio stayed more or less below 0.75. So nobody really believed that rally. So here they're kind of doing the same thing. It's not as long as time frame, but nobody's getting bullish here at all, as yesterday's reading is 0.69. So anyhow, that's kind of a sentiment indicator for intermittent term. Do you have any questions about it? Or
yeah, you said that, or they're neutral. The reason I'm asking is I look at a lot of options positions and short positions, and there isn't anybody short. I mean, if you're thinking as everybody is bearish as all get out, well, they're not backing that with money. They're not going short. Almost, there's a handful of heavily shorted stocks, but I don't know if it's the Robin Hood guys that chased everybody out, but no one wants to get short anymore. And even to today, when I ran the numbers this afternoon, they may be bearish, but they're not going short. I mean, there are a handful of people that'll short any stock, but and generally they all like to hop on one, and it'll go to the moon because they're on the wrong side. But kind of interesting. So that could be that they're just neutral.
Yeah. Oh, they're not on the long side, I guess you might say.
Yeah.
So what you're saying, they're not short, but they're not long either. So
right.
Sounds like to me they're kind of in a cash position trying to figure out what to do next. But that's one indicator that works over the years fairly well. This chart goes back to mid 2016, and it did a pretty good job, picking out a lot of the lows. So we haven't been down this low since March. We got there first time March of 2020. And it kind of stayed there for the next 6 months. But it's been a year since it's been down this low again. So it's kind of a rarity to get this low. So I'm still thinking it's still leaning bullish. We can move on to the next chart.
Okay.
If you want. This is advanced. This is the stocks in the five. It's the second window down from the top. And it's 500 stocks in the SPX, and it's a percent of stocks that got hit on the declines. And every time it got hit in the 80% range, another 80% of the stocks were down in the SPX. That's usually been in a climatic low. And this chart goes back about a year, and those red vertical lines show the times that it got down there, and it happened again back on September 20th. That was the first low, and we got back down there actually a couple times over the beginning of this week and end of last week. So it kind of implies a kind of a sold-out market. It's kind of another climatic indicator, and this works pretty well for short-term because market always bottom on panics. If you don't have panic, you don't have a bottom. So the worst thing you can see for the market going down is people not panicking about it. And I don't know, when's the last, that's what usually happens in bear markets. It goes down, but nobody, as well as it's cheaper today than yesterday, so I'll buy more type mentality. That's what happens in bear markets. In bull markets, everybody heads to the exit door at the same time, and it's kind of like a climatic low, and it's kind of a exhaustion move to the downside. And that's what happens with bull markets. So far, as the market has worked higher here this year, and actually last year, every time the market had a climatic bottom where everybody headed to the exit door, as 80% of the stocks in the SPX declined, it's been a climatic low. So we got two of them here about a month apart or less. And I'm thinking the market is building a worthwhile bottom in this vicinity, according to my work. I did get long last week and kind of broke even on that trade. I kind of wish I kept it, because I'm thinking I'm not. I think this week, end of last week was important lows, and the market's building a base here to move higher probably through end of the year. So, can we go back and down test that lows? I don't think so. I think the bottom is probably in, but we did gap up today, and today's gap could get filled, and something I'm kind of watching for here. So, and we're having a advanced decline line today, even though there's not a lot of volume to it. Advanced decline line is really strong. So I know we got a break here coming. I'll stay on.
Yep. We'll be right back with Tim Ord of the ord-oracle.com. And we got more to talk about in the next segment.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back with Tim Ord of the ord-oracle.com. Hopefully this looks good. I've got his book, The Secret Science of Price and Volume. And that's available on Amazon, right?
Still there.
Yep.
Oh, still selling the books.
Okay,
So,
good enough.
If they want to contact me personally, I can sign it. I do have books for sale here, too, at my office. So you can email me, and I'll sign it and send it to you. So
And that's,
happy to pay for it.
And that's Tim at ord-oracle.com.
Right. Yep. So
Okay.
either way,
Can't make it easier than that, unless they misspell your name, Tim. Anyway. We're up 50 points on the S&P cash, up 438 on the Dow Nasdaq's up 201, and the Russell's up 44, which is kind of the leader of the pack today at 2%. We're here on chart 2. Did you want to go to 3, or we want to talk more about this?
Yeah. Now we can go to chart 3. I'm just showing some kind of climatic indicators that kind of show that the market's probably exhausted on a short-term basis to the downside. I have other indicators, but it's they all kind of repeat themselves, at least the ones I look at for climatic. So the market had a climatic kind of a selling climax, and if it can't go down anymore, it'll try to go up. And now we'll talk about the up. And also, this is a week before option expiration week, which kind of whipsaws are common. And on this chart, on the SPY charts, a lot of these rallies really don't start on the week before option expiration, but usually on option expiration, which is next week. So I'm thinking today's rally, in my opinion, is probably not going to continue. And one reason why we're running into a gap that formed, looks like about the 26th of September there. We gapped down. We're running in that gap now. And that's a fairly big gap, and I outlined it there with parallel lines in red. And if you run into a gap on lighter volume, and if you notice today's, we got about an hour and a half to go thereabouts. And I don't think today's volume is going to be anywhere near the volume that it formed on the gap day. And if you run into a gap on lighter volume, at least 10% lighter volume, that will apply to that gap will have resistance. If it's equal or higher than the gap volume, then the market a lot of times passes through. Here, we're running into that gap, and according to my calculations, we're probably going to be at least 10% lighter, if not even 20% lighter. So I'm thinking this gap's going to have resistance from the September, well, it actually looks like about September 28th, not 26th. So anyhow, we're running into that gap. And so if Mark can't get through the gap, he'll go down, probably test today's gap up. So that's what I'm thinking. It's going to be just kind of a little back and forth here. But ultimately, we break higher. And probably the most of the rally, I think, will occur during expiration week. And
So on the volume, what are you comparing the volume to? That gap?
Yeah, the gap day, which is September 28th. So I don't have that number in front of me, but whatever that number is, if it's 10%, if today's volume is at least 10% lighter than that day's volume, that implies that gap will have resistance. If it's equal to that gap volume day, that implies the market will pass through that gap and head higher because it has enough energy to push higher. And if that gap's tested at higher volume, that's even more bullish. So, but if it's at least 10% lighter, that gap at least is on a short-term basis is going to be resistance. And the least volume, in other words, if the gap steps at 10% lighter volume, that's resistance. If it does at 20% lighter volume, that's even more resistance. And so the less volume it tests on a gap, percentage-wise, the stronger that gap will be, turning the market back down. So, and I'm kind of estimating today's gap being tested will probably be about 20% lighter. So I don't think that we're, in my view, tomorrow will be, it won't be up. It may be sideways or down. So,
but you didn't hear the first 10 minutes of the show, did you?
No, I missed it.
Well, that's fine. I was just wanting everybody to know because basically I had been looking at the options, and for what option market makers are predicting, we're on the extreme high side of what they're looking for next Friday. Not tomorrow, but a week from Friday. So I was not going to be surprised if today didn't last very long just for that, because we were way out on, and really happened all within, about 9 trading hours of going from the lows back up to some kind of high, and generally consolidate out on them. But I looked at like 90 big stocks. I showed one like Apple, and Apple was like 144 when I started the show. They thought that the absolute high for Apple option market makers think 145. So I could see just doing a whole lot of nothing, or even go back and retest maybe midday or yesterday or something like that, and play around. But it doesn't look like they're expecting any kind of big breakout before next Friday.
Oh, so you're saying the expiration week is probably going to be sideways down. That's what you're implying.
I'm saying that maybe we come back up in a week from today and test today's high, but they're thinking this is absolutely the highest it's going to be. They're not looking for any higher on at least most of the 90 stocks I looked at an hour ago with the latest options data. So, yeah, they're at least option market makers are not expecting anything, and they tend to be some of the best traders because, of course, they have all the inside books. They know where all the bodies are buried. But it's interesting. Now, that may change, and I talk about it on the show, if they change their opinion. But right now, we're just at the very high end of what they're looking for. So, I wouldn't be.
Yeah.
So that kind of
jives
with what I was looking for. Anything else? We've got about a minute and a half left.
Well, I think there's Ford around 435. I think that's Ford probably may hold. So this is on the SPY. So then from there, we got a little bit of panic in the ticks and trend at the October lows here, but not to extremes I've seen in the past, which is kind of worrisome. So could be more slop. Maybe that's what it means here. But
the other thing that really bothers me in the last 30 seconds, and you can comment on it, is just watching the bonds and the TLT. It's down another $1.70 today. It really looks like it's going about 138, and that means higher interest rates. So you're not looking at that, right?
No, I'm not. I don't look at that stuff. I kind of look at I'm kind of a panic euphoria type trader. I kind of look for those things. And
there's nothing like the bond market to give. Yeah, there's nothing like the bond market to give you that kind of incredible thrill of fast markets. But we'll see. I'll thank.
We'll see.
Thanks for being on, Tim. We'll see you in a couple of weeks. Oracle.com is his website. Just add Tim at that for his email. If you want the charts, just email me at path@tfnn.com. Thanks, Tim.
Thank you.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
And we're back. And, of course, the old email's been acting up. Of course, everybody that sent me their email, I just got it during the last break. So Hector, David, Pete, some of the other guys out here, will try to get to them now. That's why I was kind of asking in the early part of it. I've had problems with Spectrum all morning. So, sorry about that, guys. We'll try to get to it here. If I knew, I would have kept Tim on for another segment. Pete, I'm already in it. That answers your question. I don't want to say too much more about it. David, we'll be sending that to you on the next break. And Hector, why is gold acting so weak during obvious inflation times? And does he see oil by the year's end? He doesn't follow oil. That's why I try to get these things up in front because he pretty much trades what he likes. And when he's very interested in oil, he'll be paying attention to it, but not. He's in gold. And he's not one of these traders that looks at 1750 on gold and thinks the sky's falling. He'll hold it for another year. So when he says it's acting weak or something, he'll look a lot farther down the road and generally be right. He's very good on the long-term calls. So that's it. But, just keep an eye on that. Oil, like I said, I don't think he follows it. I'll email him and tell him to bring it up next time we're on. But I'm pretty sure he doesn't follow. In fact, he just said doesn't really follow the bonds, doesn't really follow oil, does gold. But he tends to take the stuff that has some long-term stuff to it. Bonds do, but he never has been into the bonds so much. Anyway, 877-927-6648. So we'll see how the rest of the day ends up. We're kind of fading. As I said, I'm not really surprised in that. Let's take a look at the XLE. I will say that I've been talking with with Steve a little bit, and it was kind of interesting to see all the energy stocks out here hitting TD9 counts. I'm not big on it, but I know I know Steve is. But you're up today on. You would have liked to seen the gap down to really signal a top out here. You gapped up, but the entire market did. You got about 25 million shares compared to 50 million shares yesterday. Now we've got an hour and 15 minutes left, but it's a pretty weak bounce, as he was saying, for the volumes. From Ann asks about what I look in volumes. I use the CBOE equities market volume, and it actually breaks it down to every level that you would ever want. And that's what's in my newsletter each day. But today we're at 7 billion shares with an hour and 15 minutes to go. You would have liked to seen with this kind of move, if it was going to stick, probably 12 billion by the end of the day. We're probably going to make 9.5, maybe 10 billion. So it's not going to be nothing. It's not going to be half volume or anything, but it's not going to be the kind of volume that you would say means that we're racing to 4,600. Now, maybe we just consolidate out of all what we've been doing over the next week. Somebody in the den said high, lower, or that. Your chart is just white. Huh. Don't know about that. Let's see if I can do that. Oh, it's good now. Of course. When I come back and do it, it's always there. Anyway, but if you want to link to this, it's the CBOE volume. It's better broken out, so you can see those. I do a lot in the newsletter each day for the for breaking those out, and they also do it in dollar volume, which is kind of important, I think, too. And so that's it. Anyway, I guess I can actually show that, can I? I have the technology. So we'll look at this. But I actually break it out every day, by day. And yeah, we did 10.9 billion shares yesterday, 10.65 the day before, 11. So if we don't get to 10 billion shares on a 60-point move in the S&P cash, that's telling you something. I also can tell by the volume compared to the market total, whether it's the big caps, small caps are going on. So it's kind of nice to also see that the dollar amount is something rather specific. Even yesterday's move was a little lighter than the fourth, where we had 164 billion dollars trade hands on that day. I also put the dark percentages, which you can figure out how many people traded off the books during the day. And, you know, we had some days that looked like some inflection days when it's all the retail traders, and that number kind of dips like it did back on the 17th. So you can infer a lot by watching the volumes. In fact, you can learn a lot just by watching. That's a, what's that, Yogi Berra thing? You can, anyway. What else do we have out here? I got some more emails here. Okay. Okay, we'll get that to you during the next break. Gold acting so weak. Yeah. Okay, handle that, Hector. Isn't that gap up on string light volume on GDX? We got enough time to handle this. I've said it before, and that is if we're going lower in the market after we get done with this, generally the first couple of weeks of selling in the broad markets, you get the exact same thing in the GDX or in gold itself. You've got a move higher to $30.69 in the GDX today. It's on less than half the volume so far today. But like I said, the buy probably in this for a longer term buy is a dip back underneath the 3x3, and the next time it cracks above it or gaps above it, just buy it, close your eyes, and set your stop at the low. And that's the best way I could say to buy GDX. So I haven't gone long the thing. I want it to come back down underneath that line, close underneath it. Then the next move above it is generally the one you want to buy. If it doesn't go down, pick out the moves. So we'll look at that when we return.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we wrap up yet another show, another episode of the Power Trading Hour, we're watching the markets bleed a little bit here, up 44 still on the S&P. Cash volume, as we talked about for a while, has been a little light. And a couple things we're looking at. China opens tonight. Might be a good night to keep an eye on those futures. As Ruby in the Den brought up, we've had a week off of the Evergrande saga. And what else do we have? We got that bond market falling to pieces. I fall to pieces. I can't remember who sings that song. But I think we're going to be singing it. I think there's more than adequate evidence that we're probably coming back to at least the 140 level on the TLT. If you're watching on the chart now, the energy off this 151.79 high from September 22nd is more on average over the days by not much, but 15 or 20%. So the bonds are on sale. Everybody kind of worried about more government spending and inflation not being transitory, as we've been lied to so many times. kind of when all the bad stuff happens, it all happens at once, and everybody knows it. As I said, that great quote in Goodfellas, where when you're at your weakest, all the people come around you, and it's bad and it gets worse. They're not there to help you out. But that's kind of it. I'm looking for some action, either from China or the jobs numbers in the morning. I think we can get down to maybe 3350 again, and then maybe come up and close at 4,400 a week from today or something, or a week from tomorrow. I don't think there's a big move in this thing, but I do think that there may be a few more shocks before we're done. So when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.